Elon Musk and Donald Trump are beefing, and it's not just political drama. Their feud could directly impact how much in taxes you pay next year as an employee or business owner. Here's how. If you live in the United States, what's happening right now in the government could impact your entire tax plan. In case you missed it, here's the tea. Elon Musk is pulling support from Donald Trump, and of course Trump's camp doesn't like it. Now, normally, that's just politics, but in this case, it could directly impact your wallet. The reason this video exists is simple. The division inside of the Republican Party right now threatens the passing of the Big Beautiful Bill, which has major tax implications. And depending on whether it passes or not, your future tax situation could look very different. Let's break this down into two outcomes without the fluff. What if the bill still goes through? Despite the drama, 2017 tax cuts will be made permanent. This means lower tax rates, plus the standard deduction would remain high, which impacts the 70% of Americans who don't itemize their deductions. The qualified business income deduction, or QBI, would not only be made permanent, but it would increase from 20 to 23%. For a business owner making $100,000 of net profit, this would mean a $23,000 write-off, and depending on your unique situation, could save you thousands of dollars in taxes. The cap of the state and local income tax deduction, also referred to as SALT, would increase from $10,000 to $40,000. This is most impactful if you're a high-earning professional or business owner in a high-income tax state, like California, and depending on your situation, could also be worth thousands of dollars in tax savings. EV tax credits would also be cut. The days of getting tax cuts for purchasing electric vehicles would be gone. And it's pretty easy to see why Elon wouldn't be happy about this one. Now, you might think that this all sounds pretty good, but here's the catch. It's not a done deal. So what happens if Elon and Trump's feud kills the bill entirely? 2017 tax cuts would expire at the end of 2025. The 70% of people who rely on the standard deduction would only be able to deduct about half, potentially costing them thousands in taxes. Also, tax brackets would revert higher, and this one's pretty self-explanatory, meaning at the same income level, you would pay more in taxes. The QBI deduction would also go away, and that would be a huge blow to business owners who now have to fork over thousands of dollars more. The SALT cap would likely go away at the end of 2025 as well. Some high earners in high tax states could see some relief from this, but the return of the alternative minimum tax and overall tax hikes likely outweighs it. And lastly, EV credits would remain. And of course, Elon would be very happy about that. So if you're a high-earning professional or business owner relying on some of these deductions, you'll likely pay more in tax in years to come, which of course now means you have less to fund your lifestyle and business. And this is where things get murky. No one has a crystal ball on what will ultimately happen. But no matter which way this thing goes, it's important to keep this one thing in mind. Stay prepared. You want to build a tax plan that's flexible and can adapt to changes without locking yourself into a rigid plan that likely will be outdated shortly. If you want someone to actually walk you through how this impacts your life and business, click the top link in the description to book a 15-minute phone call so we can go through this together. Thanks for watching, and I'll see you in the next one.